The Federal Reserve has announced that tapering will not happen, at least at the moment. We just heard from the Federal Open Market Committee that they will maintain $85 billion in purchases a month of asset-backed, mortgage-backed securities and longer-term treasuries. And here to talk about maybe what seems to be a surprise is Bob Brusca of FAO Economics. Bob, thanks for coming into the studio.
Good to be with you.
I mean, what's your initial take?
Well, actually, I was surprised. I have two different reactions to this. One is that from the standpoint of Fed communication, this makes a lot of sense. Not tapering is exactly what the data were telling the Fed to do. Right? The Fed said that this was data dependent, and that means that the decision should go in line with what the data are doing, and economic data have been getting weaker and weaker and weaker. Now, for the standpoint of the economy, the question is this really the right thing to do? And I think that there is an issue about the Fed's balance sheet getting ever bigger. I do have some concerns about that, and I really don't think we're getting the right kind of offset in terms of stimulus to the economy as the Fed's balance sheet continues to bloat. But if the Fed wants to do something else, they have to give us a different communication. I think this is the right decision that comes from the way they communicated to us. And I think it's important for the Fed to keep its communication line valid.
Sure. So this is just really another FOMC meeting that, something we've kind of heard the same tone for quite a while now. So let's move away from the talk of taper and move back into more important things, well, maybe not more important, but important part, which is the economic projections. Was there anything in the economic projections that stuck out to you this time around?
Well, they're soft and they're softer. If they came in with this view, it's no wonder that they decided not to engage in the tapering operation because they continue to see the economy being soft in the future.
Yeah.
But the one thing that still has to kind of stick in your craw is that still in these projections, the FOMC members say that their idea of a normal federal funds rate is at 4%. And that was true even as they were considering tapering. Now, if the federal funds rate is only expected to get up to the 25th percentile of that rate, right? In the forecast, the Fed was only looking in 2015 to see that funds rate getting up to about 1%. Then why would you be stopping tapering when you still have 3 more percentage points for the funds rate to go up before it's normal? If conditions are that wrecked in the economy, why would you even be considering tapering now? So I think that's the kind of thing that we have to deal with in terms of thinking about the Fed. What's really going on in the Fed's mind? Now, they're not going to tell you everything that's going on in their mind. And I think one of the things that's going on is that they are getting very concerned about the size of their balance sheet. I think balance sheet bloat is an issue, but they don't want to say that publicly. So they're going to try to say something else. But I think this is the problem. If the Fed really wants to stop blowing up the balance sheet, yet the federal funds rate is still very low, the economy is still very impacted, and the Fed is trying to figure out a way to get out of this, and they've already gone to this communications snafu and this time around where they seem to have told the markets one thing, whereas their language really was pointing to something else. Yeah. So the Fed has a big ball of string to unravel here.
So bottom line, you think this was the right decision through this point?
I think it's the only decision they could make that made any sense. I argued ahead of time that if they tapered, they were going to be in a real difficult period in the future in terms of trying to communicate with the markets because they will have done something totally against what they said they were going to do. So they've kept their communication lines clean, but they still have a big policy problem.
We'll hear from Ben Bernanke here soon as he gives his press conference. There was talk among a lot of analysts and economists beforehand. They'll be focusing on this very closely for more quote unquote dovish language. What are you really looking for out of the press conference?
Yeah, well, in the Fed statement, there's very little change in the language. In fact, I'm kind of surprised at how little there is. I thought they might say something different about the unemployment rate because the unemployment rate is dropping so fast. And yet job growth is so slow. We've got this problem with labor force participation rates going on, and yet the Fed didn't even blink an eye at the unemployment rate, right? Those passages read the same way that they did. And the Fed continues to say that the economy has less risk than it had earlier in the year, but they're concerned that if things keep on like this, that we could have more difficulties later on. And I think that was a little bit of a strange statement to make because it seems to me the economy is a lot weaker than that, and the Fed's own language and their own forecasts portray an economy that I think is weaker than that.
Yeah, so it seems like even today there was economic news, there was housing news that came out this morning. Fed members certainly had to have seen that today.
Oh yeah, they would have had somebody bring them that little press release in, and that was not a good report for a Federal Reserve that wanted to taper. That showed a lot of weakness in the economy, certainly in the South, and not too much strength in other parts of the country either. So the single-family units were getting extremely weak, and most of the strength is in multifamily units, and that's not really what the Fed wants to see.
We've finally gotten a little bit from him. Talking back and forth while we were listening to it, it seemed that you said one of the things that stuck out was that Ben Bernanke seems unfazed at this point. What did you mean by that?
Well, he certainly knows that the markets were anticipating the Fed would do something, and but he's above all of that, and his point of view here is that no, the Fed made this communication, and the Fed is sticking with this communication. And we don't know to what extent the Fed recently changed its mind, if the market opinion was all wrong. We don't know about any of that, but we know that he is sticking to what the Fed had said, and this view that's data dependent, and he keeps getting buffeted from different sides about when the Fed is going to do this. Might they do it by the end of the year yet? And he keeps going back to the idea that no, it's data dependent, that we're looking for these three things being inflation performance, improvement in the labor market, and continuing growth.
Right.
So I myself don't understand why he wouldn't say, well, since we're not doing it today, and since it's already September, it's unlikely these conditions are going to change by the end of the year. To me, that seems kind of practical. The concerns we have about the economy are going to be with us. We certainly don't expect there's going to be any magical deal between Republicans and Democrats on the fiscal front. So it's hard to imagine things are going to suddenly get better and the Fed would be able to go on and implement this tapering. There was, I think, an interesting question about when the Fed funds rate would get back to its normal level of 4%.
Right.
And against that background, I think it's interesting to look at the Fed here, with the funds rate still scraping near its lows, the Fed thinking that normalcy is at 4%, and yet the Fed seems quite anxious to end tapering with the federal funds rate still miles away from a position that we would consider normalcy.
Yeah.
And an ongoing problem is that if you look at the Fed's forecast, not in terms of its broad range, but in terms of the central tendency. Now, the central tendency simply means that you take the third of those forecasts that are highest and lowest, you throw them away. You look at the middle two-thirds.
Sure.
And if you look at the middle two-thirds of the forecast, you aren't getting back to 2% and the inflation rate, even at the end of this forecast period.
Sure.
And so the fact that you're having any increase in the federal funds rate during this period is kind of surprising, because you still have members thinking that the inflation rate is going to be below 2%. And that's a bit of a contradiction with what he said about guidance.
Right, because one of the ideas when the Fed eventually does decide to taper, the trigger really is that the Fed says we're tapering. Ultimately, that means we're getting to the point of raising the federal funds rate, right? That's on everyone's mind.
Right. Yes, we expect that the Fed will begin and basically end tapering before they start raising the Fed funds rate.
Right.
So that's what we expect. And so they certainly want to have that accomplished. Now, I think one of the things that we can say when we look at this is that the Fed doesn't really seem to be convinced by its own forecast. The Fed isn't, in this forecast period, even really obeying its own rules, in the sense that they have the federal funds rate going up with the forecast for inflation still below 2% by most of the members. And that doesn't seem to be playing according to the rules of the game.
Right.
Now, in that respect, we can also look at the Fed that gave us guidance that the markets thought meant we were going to get a tapering announcement today. Okay? This was something that was said back in June, and here we are in September, and the Fed, projecting over that short period, got things wrong.
Right.
So why should we believe that the Fed can give us guidance over a period out to 2015 or longer? Why should we believe this guidance if the Fed has been wrong over the short-term period?
And it seemed like a lot of the reporters were peppering, a lot of questions that were kind of hitting at this point. So with that in mind, investors in the market must be kind of showing a little bit of exasperation, right? They don't, they said, as it was like one of the reporters pointed out, in June, you guys suggested, well, we're talking about this. Mm-hmm. Everybody thought it might happen today. Now it's not there, so what are we supposed to believe, right?
Well, the Fed thought in June that the labor market conditions were looking solid. We had a number of employment reports that had created 200,000 jobs a month, and the Fed basically pulled the trigger on optimism a little bit too soon. Remember, the view at that time was, oh, well, we had these tax increases at the end of the year. We've got sequestration. The economy is still growing. The economy is resilient. It's fine. And it just turned out that those forces hit us a little bit later.
Yeah.
And so we weren't so fine. And this is always a problem in economics, that things that you are looking at and wary of hit the economy with a lag. And you have to be very careful about thinking that the full effect of something that you saw coming has played itself out. So it wasn't the Fed didn't know about those negative forces. They just prematurely concluded that we had escaped them. Kind of like in a horror movie where things go dark and you think you've escaped the bad guy and he jumps out of the dark and he gets you, right? Well, you thought you knew he was there and then you thought he was dead, but then he isn't.
Right.
And so this is what monetary policy is dealing with in terms of these economic lagged effects.
Well, what about the question asking Bernanke about him stepping aside? How do you think he handled that question?
Oh, he wants to keep the focus on monetary policy. I think Steve Leisman asked that question, a three-part sort of question, and Bernanke's answer to all three parts was, look, it's not the time for that. This is time to talk about monetary policy. And I think this is the great mark of the kind of man he is. This is really a man that you can respect. He is a fine chairman. You can disagree with the points that he makes, but he is a guy who has great credibility, who has great intelligence, who's really trying to do the job the right way, who's dealing with a committee that has a number of different points of view, and he's trying to give everybody their opportunity to have an input, and he's going to be a very difficult man to replace. And I know a lot of economists wonder why he was so swiftly kicked out of the office by Obama rather than given a chance to make his own exit. Because if he had been making his own exit, he would have made the announcement instead of him being told in public and the rest of us by Obama, thank you and your time is up.
So let's pull back to the monetary policy. The last question before we head out of here. What should we expect moving forward from the Fed?
Well, I don't really think that we know. What we do know is that in this meeting, Mr. Bernanke was very much back to the rules that as we understand them, under the first communication they had made about tapering. On the other hand, the fact that he wants to leave the door open to the end of the year kind of confuses me about whether he feels that he's tied to that as an objective. I mean, the other aspect of this is that if the Fed thinks it can give us forward guidance about policy, it's got to be able to give us some short-term guidance about when it's going to end its begin to end its QE program and taper.
Yeah.
If it can't guess at when it's going to end QE, how can it possibly guess about where the funds rate is going to be out to the end of 2015? And I think that's sort of the logical inconsistency that exists in what was going on in this press conference today. The Fed cannot have its cake and eat it too. If it can't forecast, then it can't give us forward guidance. And it already had given us some projections about tapering that were wrong. We know it missed forecasting the last recession. We know they really, really don't forecast well enough to do some of the things they want to do. There may not be a magic number, as he said, that will cause the Fed to stop tapering, but neither does the Fed have magic numbers in its forecast. You just have a bunch of people guessing what the future is going to be, and they're frankly not that good at it. Right. So this is why forward guidance, which is one of the policies he talks about, really, I don't think has any impact. So we're left really with QE, which is a program they want to end. And then basically we're left with Congress and the administration, what fiscal policy can do.
Sure.
And I think that's the disappointing thing about what we learned out of the conference today.
Well, Bob, as always, it's great having you in the studio whenever we get to talk about these economic projections.
Thank you, Joe.
No big news, but hopefully we'll have you back.
Thank you.